Hey everyone, welcome back to the channel, and in this video we're gonna go over fair value gaps and how good they are if you utilize them in your trading style. And I recommend everyone, whether you are using ICT concepts or you're not using ICT concepts, maybe you're using moving averages and other things to trade, but I guess if you incorporate fair value gaps in your trading style, it's gonna skyrocket your performance. It's gonna skyrocket your trading results. So I'm gonna go over fair value gaps and how I use them, and how you can also incorporate them in your trading style. So basically, any fair value gap that is on the higher time frame, like the 4 hour time frame or the hourly time frame, or and also even the 15 minutes time frame, you can take, you know, good trades when price comes near to it or price trades into it. So for an example, I'm gonna show you that now, tomorrow I will see how the price comes and reacts out of this area. I have it marked. This is the 4 hour FVG, this is the 15-minute FVG, and when price comes near to it, I will see how it is going to react out of it, and how what kind of a price action it will show, and then I'm going to go in and trade a reversal from around this area, and not before it, not here, not here, not here, but once it touches it and goes in, and then it is going to show us a reaction out of it, and depending on the reaction, I'm going to trade it. So just to show you a past example, on Friday we had this beautiful fair value gap on the 15 minutes time frame, which is right here. I have marked it here. So we're gonna go under the 1 minute time frame and see how price came into it, and how price reacted beautifully, out of it. So that we are able to, understand how you can trade it. So I'm gonna go on to 1 minute time frame. So check this out. So price went up, created this fair value, 15-minute fair value gap. So I'm gonna just, this is the 15-minute fair value gap, and price came back down. So this is important, guys. Price came back down. Price went up, and then slowly it climbed back down into the fair value gap. Now already we are in an uptrending market on Friday, and before Friday we were, trending to the upside. So we're more likely, because the order flow is to the upside, we're more likely to trade, along. We're more likely interested in going long than going short. So if price comes here and then gives a right kind of a reaction, then of course we'll be interested to buy. So what do we see? Price comes back down here, and price gives a reaction out of it, but I'm not satisfied. Why I'm not satisfied? I'm gonna share with you. Uh, mm, so basically, when price touched it the first time, you can see it is barely touching it, and I don't think it is touching it even, but it's coming very, very close, like 1 point away from, or a half a point away from, yeah. So half a point away from touching the fair value gap. And so there are two things that you can understand it. So price came very near to it, and then, it was kind of rejected, but not rejected in the manner that we would like to see the rejection. So if price would have come in and then kaboom, gone to the upside, a really good reaction. So we understood at that point that there are a lot of buyers that have come in at this level, and then we could, check if there are any entries as per your model, and then enter and take a long position and ride the wave. So but that did not happen. Okay, so we are watching. So right now we're watching, and we see another kind of a move happening, and it is building up this um, low resistance liquidity around these lows here. So one is here, one here, one here, and here. And see, you can see it is building all this liquidity, which makes sense for the price to take out and then trade into this fair value gap. Okay, once it trades into this fair value gap, well, it's fine. But once it trades into this, if there is a proper reaction, the reaction that we were looking here, right? If that kind of a reaction we see here, of course, we'll be interested. So what happens next? So next thing that happens is price touches it and then goes back up, inverses all of these FVGs. Check this out. This FVG and this FVG, both of them are inversed, and price closes above this high. So you understand at this point that a lot of pending orders were triggered at this point. And that's how price showed this kind of a reaction, a high moment reaction. So you understand the momentum and the background of what is going on inside the candle. So lots of buyers coming in. At that point, the next thing that you want to take care is you want to get in. And you can see it also create a fair value gap right here. But what I'm going to do is once it inverses these two um, fair value gaps, this makes me really interested, and I'm going to get in right here. And if you get in right here, this is a really good point, and you can see how price reacted out of it. So this is the base, this is what I wanted to cover in this video, that how you can trade the FVGs, how you have to look for reaction out of the fair value gaps. So if there's a really good reaction coming out of fair value gap, then you can trade it. But of course, the fair value gap should be from a higher time frame. Otherwise, it doesn't make sense, because there are lots of fair value gaps that you can see right here. One is sitting right here, right? And price, you can see it traded into this and then traded again into this, and there was no reaction because it is not a high time frame fair value gap. But similarly, if you have a 15-minute fair value gap, a 1 hour fair value gap, a 4 hour fair value gap, a 1 day fair value gap, you will see price reacting like crazy out of it. But yeah, it can happen that sometimes price will not react out of it, like it happened here. Then of course you stay out of the you stay out. You don't go into the market just because it touched the fair value gap. But once it touched and gave you that kind of a reaction out of it, then of course you can go in, right? So there are numerous times that you can see it happening in the past. And if I go on to the 15 minutes time frame right here, so this is one of them, 15 minutes time frame, and let me check. Let's see what happened here. Another fair value gap, you know. So we're gonna mark it and analyze it on the 1 minute time frame, and then I will wrap up this video. So this is the fair value gap that we are looking for. I'm gonna delete this one and delete the lines right around here. Okay, so let's go on to the 1 minute time frame and see. So this is the 1 minute time frame, and this is the fair value gap that was created, and price is already coming out of the fair value gap that we traded here, and then it created another fair value gap, and price is just dangling around this fair value gap. And you can see how close it came to touching it, but it did not, and then went back up. And this could have been a scalp right here. So if when I see that it is showing this kind of a reaction even when it's not touching the FVG, I know something really good is going to come out of this FVG. So let's say for a scalp, I would go in here and my take profit would be around here. It's $150, pretty good. And $200 is a stop loss. Or we can just keep the stop loss just below the fair value gap, which is right here. Okay. So it creates the fair value gap, or or stop loss is right here. Or $50, 1:1. We can see the risk reward is here. So you can see how the price reacts out of it. So almost touched the take profit level here. So at this point, just to be just to be safe, I would close 3 micros, and then I'm also gonna move my stop loss below this low. Okay, we are only $20. Um, we're only gonna lose $20 if price does not hit our take profit. But I expect price to hit these levels and then come back. But let's see, price can do anything. Wow, it's almost like 1 point difference in touching our stop loss, in touching our take profit. So this is basically, I mean, what kind of a scalp I was looking for. So going up, it makes some money and we get out, right? Now we're gonna see how it came in and how it reacted out of it and why that would have been a better trade. So let's so let's go back down. Price is crashing down, and then it makes a very big candle, goes in, and we have to be cautious when there are big candles. We have to wait for the reaction, of course, and price comes right back out from the fair value gap, and you can see that already that you are seeing really good reaction out of this fair value gap. And then again, let's wait for another candle, and it inverses all of these fair value gaps. Now price has gone out a little bit. If I trade it right now, I mean, I can trade it, but the the stop loss would be too big. So I would want it to come back a little bit, and then I would enter. So for not missing the entire move, I'm gonna enter with 1 micro, and the take profit, of course, would be somewhere around here, $50. And I wish the price comes back a little bit. So price has come down a little bit, and I'm gonna enter 2 more micros. So in total, I'm entered 3 micros. But if price goes down a little bit more, then I'm gonna enter like 2 more micros. Come on. Yes, this is good. Oh, ah, I cannot enter here because this is the replay. Um, it doesn't work like that in the trading view, so I just cannot enter here. But I would have definitely entered here. So I will just, you know, for the sake of our video, I'm just entered 2 more lots, and the total is 5 micro lots. So let's go. Nice move to the upside. We have this fair value gap here. It has traded into it, and we are up $128. It would have gone at least up to $176. So, but we're gonna wait for our take profit to be hit, and waiting for it. So you can see $200 up, and at this point, I'm gonna close 3 micros, and the stop loss would be just around here, and the take profit is where it is, and that's done. So that's how easy and that's how calculative you can be when you see a fair value gap and how you can trade a fair value gap. So I think this is not something, this is something that I learned with experience. Like, when I traded fair value gaps a lot, I would just trade every fair value gap out there. But slowly I tried to figure out that the fair value gaps that are really good are the ones that are giving us reaction. They're giving a really good impulse move that comes out of that fair value gap. So you don't have to trade every fair value gap, but trade the one that gives the move, that gives that kind of a reaction out of that fair value gap, right? So in the next video, we're going to talk about how I use OTE with my fair value gaps and how it improves the overall trading performance. It skyrockets the trading performance if you incorporate OTE levels with your fair value gaps, and if they are on those levels, then my God, it is just crazy how the outcome is. We're gonna cover that in the next video. For now, I think this is good. Take care of yourself and subscribe to the channel, share the video, whatever. Take care. Bye.